welcome to Power Breakfast. I'm Pavitra Parekh. Those were all of the top headlines that we are looking at this morning. There's a lot going on in the global markets and the commodity markets. So let's kickstart with what's going on across Asia right now, because it is a largely positive start. And after a while, right, we had 3 straight days of declines on Wall Street, and we were sort of facing that weak handover right at the start. But Asia for now is largely higher. Gains this morning led by the Nikkei market, so 1.3% higher on the Japanese markets. You have Hang Seng on your screen. That one is also above 1% higher right now. Taiwan doing quite well, 0.7% in the green. By the way, Hang Seng this week alone has seen a rise of around 5%, so do keep that market on your radar. Taiwan has been an underperformer. It's down around 3% for the week. The other markets, the likes of Kospi, Straits, not doing too much right now, but they are mildly higher as well. So it's looking all in all quite all right for Asia. The SGX Nifty will also come up for you, and that is indicating a good start for our own market. 68 points higher is what we have on the SGX Nifty. That's what's going on in Asia, but let's also talk about the US now. Wall Street ended Thursday's trading session higher. So the Dow Jones was up 183 points, the S&P 500 was up around 30 points, and the Nasdaq Composite rallied to close around 1% in the green. CNBC's Betha Coombs is here with a wrap of all of that action from Wall Street.
On Wall Street, stocks bouncing back from recent selling with a modest rally. The Dow closing up about 0.5%. The S&P ended its 5-day losing streak with a gain of 0.75%, and the Nasdaq finishing up just over 1%. Trouble today for Microsoft's planned acquisition of video game maker Activision Blizzard. Antitrust regulators want a court to block the big deal because they think Microsoft will restrict Activision titles to its own Xbox platform, despite the company's recent assurances that it will also make PlayStation and Nintendo versions of Activision's popular Call of Duty game for at least the next 10 years. The Biden administration has been very aggressive when it comes to antitrust issues, but so far this year, it has lost a number of cases. That's the action from the U.S. market. Now back to you in Mumbai.
Betha, thanks a lot for getting us all of that action from the U.S. But staying with Wall Street, let's also bring you some important opinion on how the markets are likely to move from here on. So listen into that.
When you're thinking about the next 12 months and thinking about the dials and overweighting risk, underweighting risk, there we think it's still the time to be underweight risk, because we've talked a lot about recession, but we don't see that priced in. I think there's still a hope of a soft landing, and so we can have a rough start to the year. So we would still be underweight equities as well as high yield credit. Ultimately, we think we are slowing down, but the economy has been actually remarkably resilient. So when we talk about elevated recession odds, we're thinking about the dominoes falling much more middle to the second half of next year. And then for the beginning of the year to be the process of actually pricing in those dominoes falling later on.
So for 2023, the key risk is a recession. And the two reasons why we're worried about it are the impacts of tighter monetary policy and the mixed economic data that we're seeing. And what is that impact on earnings, which are likely still too high for next year, corporate margins, and also the consumer. So how do you build a recession-resistant playbook? Within equities, look at companies like dividend growers. They do have this income component and lower volatility. They still look cheap to us. Outside of it, we actually like fixed income over equities. You can get equity-like returns from fixed income in higher quality areas, such as investment grade. And then outside of public markets, you can look at real assets like farmland and infrastructure. These tend to be more resilient sectors with companies like waste management in them and for infrastructure. And this, again, is fairly recession resilient. And that's what you want to focus on next year as we do worry about economic data.
All right, that is some important global market opinion that we are tracking. But let's now talk about all of the cues that you should track as we get into a fresh trading session. We have our research team here with the trade setup. Nigel, Vivek, as well as Surbi join us now to bring you exactly that. Guys, a very good morning to all of you. And Vivek, let me come to you first. What are the cues looking like this morning?
Well, good morning. After almost 4 straight sessions in this particular week where we saw quite a bit of negative cues as far as global markets are concerned, today finally we are seeing some positive cues coming in. So, the US markets yesterday managed to snap a 5-day losing streak, and yesterday ended the session with gains. Also, when you're talking about European markets largely mixed, but yeah, they ended with a positive bias. When you talk about gold prices, continued the gain, a marginal gain yesterday, but this particular gain was on the back of the fact that the dollar strength actually eased in yesterday's trading session as well. Now, coming to crude oil prices, yesterday was quite a volatile trading session. Reports of an outage caused a brief spike before crude oil prices once again fell, and now at a fresh 2022 low. And Brent futures were down in yesterday's trading session almost 0.7% to the $76 per barrel mark. Now, coming to closer home, today in today's trading session, markets will cheer the outcome of the Gujarat as well as the Gujarat elections, especially where BJP won by a handsome majority. But other than that, it's largely non-event driven trading session, and Asian markets are trending in the green. SGX Nifty 2 is indicating a gap up open for the Indian markets.
Okay, so we are bracing for a good start, but let's see how we go from there. Let's also now talk about the individual stocks that you should keep on your radar as we get into this trading session. We have Surbhi standing by with that entire list. Surbhi.
Hi, thanks for that. I have a few stocks on my radar today. The first one is Hindustan Unilever, where it is going to acquire 100% stake in Zywie Ventures in two tranches. The first is going to be a 51%. This is going to be completed before Jan 2nd, 2023 for 265 odd crores. It is going to acquire the second tranche of 49% 3 years after the first. It is also going to acquire 20% stake in Nutritional Lab for 70 odd crores. Next is Paytm, where they are going to hold a board meeting on 13th of December to consider a buyback. Adani Enterprises, where they are going to acquire 100% stake in Alluvial Mineral Resources Private Limited. Lupin, where it appoints Spyro Gavaris as the president of US generic businesses. And also lastly, insurance companies will be in focus today because the regulator IRDAI has allowed foreign investors, including FPI, to invest in preference shares and subordinated debt issued by the insurance companies. It also allows the debt to be listed on in the local stock exchanges.
All right, Surbhi, thanks a lot for bringing us that entire list of stocks. We are going to keep these on our radar. And finally, I'm going to hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning. Pavitra, what a session we had yesterday. The Nifty Bank was breaking out. That did very, very well, while the Nifty as well ended high with a gain of closure around 50 points. In the index futures, well, you had the Nifty. On the Nifty, the open interest was a little bit low, so that's telling you a bit of a short covering bounce did play out there. But the Nifty Bank came back in style, and with the surge that we saw in the Nifty Bank price, you had a big open interest build up as well, telling you that there was fresh buying on that index. What do the FIs do? Well, it's perfectly telling in there. It appears some shorts were covered out, while they added some longs as well, though they continue to remain net long on the index. On the options front, first we're looking at the Nifty Bank. Now, out there on the Nifty Bank, we did have, the 43,500 strike that was fairly active. Big surge in terms of open interest, the premiums around 240 rupees. There's a sense there was writing out there, which gives you a bit of a support, because at one point of time, the premium on that strike was 400 to 500 rupees. So you deducted from 43,500, and that's telling you 43,000 is a bit of a support zone. The 42 at around 42,800 as well, we did see a bit of a bounce out there, and that tallies in with the 20 DMA. So that becomes your support zone. On the Nifty itself, the 18,600 call and the 18,600 put, well, they were very active in trade yesterday. So you're getting a bit of a range then to work with. The 20 DMA on the Nifty becomes crucial on the downside, while on the upside, the recent high, closer on the recent high, 18,850. That is a firm resistance, I would say, going by the call writing. So let's see whether or not, we can break out of there. But the SGX Nifty suggesting a gap up. My sense is don't chase this opening. You'll get a dip intraday. You buy into that dip. You need to buy into the dip, but don't chase the opening, because we've seen the evidence is the last few days, if you chase that big opening, you don't make too much money. So keep that in mind.
All right, that is the trade setup today. Nigel, Vivek, as well as Surbhi, thank you very much for joining us and taking us through all of those cues. With that, welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and let's now talk about some individual stocks which could be in focus today. The board of Paytm is going to consider a buyback in their board meeting, which is scheduled on the 13th of December. So Abhishek is joining us right now. Abhishek, good morning. Take us through the details.
Good morning, Pavitra. So as you mentioned, Paytm's board is considering a buyback option for which they are going to hold a board meeting on 13th of December. Just to alert our viewers, the cash and equivalent component in the balance sheet over the last 3 quarters has been north of 9,000 crores. So Q2 FY23, it was around 9,182 crores. Q1 FY23, it was more than 9,400 crores. And for FY22 as well, it was around 9,270 crores. So the net worth is around 13,564 crores. SEBI rule says, for tender route buyback, you have to have 25% of net worth that can get bought back. While open market, it can be 15% of net worth. So the calculation shows that via the tender route, they could have a buyback of 3,391 crores. While via the open market option, they can have a buyback of around 2,034 or 2,035 crores. Just to alert our viewers, the IPO was priced around 2,150 and the CMP is around 508 per share, which is a wealth destruction of more than 76%. Back to you.
All right, Abhishek, thanks a lot for filling us with all of those details. In fact, in just the past 20 days or so, the stock has also lost 20%. So that is on Paytm. But moving on now to FMCG maker HUL, that has expanded its footprint into the health and nutrition segment with the acquisition of Oziva and Wellbeing Nutrition. Shilpa is here with the details. Shilpa, how much did HUL spend on these?
Now, HUL is the latest FMCG major to foray into the health and well-being space. Now, this is with two strategic investments. Now, the first one is a 20% stake in Wellbeing Nutrition for 70 crore rupees. And Wellbeing Nutrition is a lifestyle protein, hair, beauty supplements brand that was founded in 2019. And it has a current run rate of about 50 crore rupees. And the second one is a plant-based protein and wellness brand called Oziva. And this is happening in two tranches. The first is a 51% stake now for about 264 crore rupees. And the remaining 49% will be 36 months from now at a pre-agreed valuation. Now, Oziva had an annual turnover of about 124 crore rupees in FY22. Now, HUL will have a board representation on both these companies, while the current management will continue to run them. And while these deals are smaller in size, HUL sees a large opportunity of 30,000 crore rupees in this space about 4 to 5 years from now. Analysts are also upbeat about the fact that HUL has a proven track record of significantly scaling up smaller acquisitions. Now, VWash and Indulekha are cases in point. HUL has also said that it is looking to bring some of its brands from the global health and well-being portfolio to India at an appropriate time. And remember, HUL is just the latest company in this space. Now, we have seen other FMCG majors betting on this industry too. For example, Imami picked up a 19% stake in protein and nutrition brand called True Native. Marico also has Fitify, which is a health, nutrition, wellness brand that it had launched in 2019. Tata Consumer also forayed into this space with health supplements brand called GoFit that was just now in September. Nestle, ITC are also eyeing this space. Now, this category has immense potential, like HUL said, 30,000 crore rupees about 4 to 5 years from now. Back to you.
Shilpa, thanks a lot for that. So definitely a hot category, and the space has really sort of picked up, right, after the entire COVID pandemic through so much focus on health and well-being. But with that, we're going to get you some important commentary as well. This is from one of India Inc.'s biggest voices at the CII Global Economic Policy Summit. Uday Kotak weighed on the lack of fresh capex by corporate India and the health of the Indian economy. So listen in to what he had to tell us.
Global situation thanks to COVID and Ukraine has made a lot of people in India circumspect. In a 24/7 news, if you keep on getting barrage of bad news from around the world, it's got to affect your psychology and your mind. And we are not immune to this. I remember in 2008-9, I took a call. Don't read the Financial Times and the Wall Street Journal. It makes you very negative about the world. The fact of the matter is 24/7 digital world, what happens around the world affects us. But we got to look at our facts. We did a survey in Kotak of 900 corporates and SMEs recently, first week of November. We found 66% of the companies across corporate to SME having capacity utilization of 80% or more. But only 15% of the total were ready to invest for new capex. A growing economy needs to have a current account deficit, and we keep on having a current account deficit for a long period of time. But at some point of time, we must be Atmanirbhar. Even this year, we will be $120 billion negative current account deficit. Means our profit and loss account in foreign exchange is we're earning less than what we are spending. Therefore, we need to get Atmanirbhar on our current account. And second, I understand fiscal deficit consolidated has gone up worldwide thanks to COVID. And India is at consolidated, give or take, around 10% of GDP. We need to have a credible, consistent, resilient plan that we will get better on P&L account, even on fiscal deficit.
You're still tuned into Power Breakfast, and as promised, let's talk about the commodity space. Manisha Gupta is here with an update. Manisha, as we wind down on this week, it really has been all about oil.
Oh, yes, Pavitra, 10% down on crude oil prices in this week and 20% down for this month now. And there is just so much happening. But to begin with, it also is the unwinding of the money as we head into the year end. So the crude oil prices have now swung into a contango. The hedge funds and money managers are cutting their long positions, and that clearly can be seen onto the prices. And crude, in some sense, could be oversold because it's fallen by 20% in last 1 month itself. Some rebound perhaps is not ruled out. But the markets will still assess sanctions impact on Russia. The U.S. officials are talking about potential recession in 2023. And we've seen all week economic data come in from UK, European Union and China, and that continues to weigh onto the market as well. But that's about energy. When you look at the metal prices, they have seen support come back yet again. So whether it's copper, aluminum, iron ore, all of that trading in positive.
All right, Manisha, thanks a lot for getting us all of that action from the world of commodities. But here's some more updates. The IMD has warned that the cyclone Mandos is likely to bring in heavy rain in Tamil Nadu, Puducherry as well as Andhra Pradesh today. As many as 17 districts in Tamil Nadu, including Chennai, have been declared have declared a holiday for schools as well as colleges. In fact, the National Disaster Response Force teams are also on high alert to be able to tackle the situation after the cyclonic formation over the Bay of Bengal. So that is what we know so far. We will keep bringing you any updates on this as well that we pick up through the day. But with that, we're going to wind down on this edition of Power Breakfast. The Asian markets are looking quite good, led by Nikkei, but Hang Seng has actually come down quite a bit. It's absolutely at the flat line, so it's given up around that 1% gain. The SGX Nifty indicating a positive start. Thanks for tuning in. Bazaar Morning Call up in 2.